Hello, ladies and gentlemen. A warm welcome to today's webinar, which is brought to you by Shared Services Link in association with Tradeshift. Today, we're looking at how to prevent panic, schooling up now on e-invoicing mandates. My name is Susie West. I'm the founder and CEO at Shared Services Link, and I'm delighted to be introducing as our main presenter today Marcus Gray, who is tax compliance and interoperability expert at Tradeshift. So great to have Marcus with us today. You, of course, have a role as to what you get out of the next 45 minutes or so, which is to really make sure that you put your questions through to Marcus. So just text those through to me in the GoToWebinar panel, and I'll put those through to Marcus in the last 10 minutes of this webinar. The slides will be made available after the webinar as well, so you can refer to them moving forward after today. Let's have a look at the context for today. So I'm sure you'll be wholly aware as to what's happening. So, but just a bit of a recap for most of you. In a number of countries, VAT or sales tax actually makes up a significant amount of governmental tax income, so to the tune of 40%. And you can imagine that 40% is pretty desirable as far as governments are concerned, but in the last kind of 3 or 4 years, we've obviously seen that governments are scrutinising spend a lot more, and they're even more keener than ever, really, I should probably say, to get their hands on every single penny of VAT or sales tax that is owed to them. So this is really what's driving all of these mandates that we're now seeing in a plethora of countries. What has happened really up until now, and it's still ongoing, is that it's a bit of a combination of a bit of fraudulent stroke criminal activity where individuals or businesses are trying to avoid paying tax and are sending dud invoices that don't reflect the kind of the true situation, or process inefficiency has actually meant that governments haven't been able to get their hands on the VAT sales tax that they have been owed, and they've been short. They've been short, really. I mean, this is a figure that we're still trying to get our arms around. They're short by about $500 billion, and this is what we refer to as the VAT gap. So it's huge, and countries are now saying absolutely no more, and they're looking at the successes of what's been happening in Italy quite recently. Huge successes in Italy, with Italy closing their gap there, and obviously going back to the founding fathers, if you will, of this methodology, Brazil, Mexico, and looking at their records and seeing these countries are having huge success. So the countries are coming on very fast. They're coming on board very fast. And what does that mean to you? Well, what it basically means, and you'll be very familiar with this, and this is a refresher, is that the roadmap ahead for all these countries coming on board with their clearance models, where they're wanting to see the legitimate invoice, often before you even see it, the buyer, that roadmap is relatively overwhelming. It can look intimidating. You look at these roadmaps and it can cause you to, to have quite a tight chest. So what we're going to be doing today, hopefully, is giving you some relief. And Marcus today is going to be giving you an updated perspective on these changes. And he's going to be zeroing in on a few things. So VIDA, that came into play end of last year, and it's a new feature within this field. So Marcus is going to be just spelling out a little bit more about what we've learned in the last 6 months about VIDA. He's going to be zeroing in on 2 key countries that are coming up, Poland and France. And it's very interesting to see the like for like or not comparison between the two. And then that will give you an idea as to how there isn't a templated approach to all of these countries. And really importantly, he's going to be sharing with you the one key question that you need to ask and you need to find the answer to help you figure out if action actually needs to be taken within a country now, or if you can wait a bit. So Before I hand over to Marcus, let's just kick off with one key poll. So coming up on your screen now, just to understand a little bit about what size organisations we have represented on the line today. How many accounts payable invoices do you process globally each year? So all kinds of AP invoices, paper, PDF emails, electronic. Less than 50,000, 50,000 to 250,000, 250,000 to 500,000, 500,000 to 1 million invoices a year, or more than 1 million invoices processed by your accounts payable teams globally each year. So just to recap, how many AP invoices do you process each year? We're at about 55% of you responding. If you haven't already responded, please do so. We'll try and nudge these figures past about the 60% mark. Closing the poll in 3, 2, 1. Let's have a look at the results. So just on 60% there. So thanks for that. Right, what have we got here? So just over a third of you processed less than 50,000. And this is quite interesting. We are seeing that because of these mandates, organisations with smaller volumes of invoices, i.e. less than 50,000 a year, are actually moving towards electronic invoicing. Before, it was really those companies that processed 50,000 plus. So this is an interesting development. Just under a third of you are processing between 50,000 and 250,000 invoices. And that means a third of you are processing over 250,000, with just under 20% of you processing significant volumes, so more than 1 million invoices a year. Great, thanks for all of that. And over to you, please, Marcus.
Thank you very much, Susie. So my name is Marcus Gray. I'm the product owner of compliance services at Tradeshift. So it's my role to keep monitoring what's happening in the market and advise the business of which tools to develop next in order to support our customers' compliance needs. So in today's session, we'll cover several different themes throughout the presentation. We'll take a look at what the key changes coming into play in the next 12 months and beyond are, the steps to take to avoid panic or penalties. We'll take a look at, as Susan said, France and Poland, and see what the differences are between countries. We'll take a look at, well, within the changes that we've got coming up, who's responsible for complying with the regulations, whether it's the supplier or the buyer. And then we'll have a look at how we've deployed, how we use Tradeshift to facilitate our clients' compliance needs. So the pace of change is rapid when it comes to tax regulation. Remember that VAT was only introduced in its current form in 1954. And since then, 174 countries introduced VAT, and the focus was what was needed to be included on the invoices, with regulations about content really getting into more detail in the 90s. We jump forward to now. Since 2014, tax authorities have been introducing clearance controls, where they intervene within the invoice cycle to make sure that they're gaining the maximum revenue from VAT. So in this view, that we can see the countries that have already introduced some form of clearance control, and the types of controls that they've introduced vary. They could include periodic reporting or real-time reporting of transactions, and they could include full clearance, where the government's receiving invoices in near to real time as part of the invoice life cycle. The rate of change is now accelerating, and with more and more countries announcing plans to introduce clearance over the next few years. Highlighted in blue here are those countries that we've heard are going to introduce plans, but I think this is a modest view, and we'll see more announced over the next 12 months, especially with the need to gain prior approval in Europe for implementing e-invoicing being removed within the next couple of years. So for companies based in the country's changing regulations, it's challenging to understand what needs to be done and by when in one country with regulations not being clear. And intentions to introduce these changes are announced as firm plans and conveyed as firm plans when they in fact aren't. They are just an intention. So for companies that operate globally, monitoring and managing the changes can be very daunting. And here's the challenge for governments. Huge gaps in VAT revenues are the main driver behind the changes. This is the EU's latest VAT Gap report. Just under 93 billion of lost VAT revenues been reported. And it's not surprising that the countries with the largest gaps are the ones that have already announced intentions to bring in controls. Italy have introduced their clearance process. France, Poland, Germany, Spain, Portugal, and Romania have all announced intentions to bring in new controls, as well as Greece and a couple of other countries that you can see here. I don't think anyone would argue that increasing VAT revenues is the main driver of the changes, but there are silver linings for businesses. I think we'd be remiss without having a chat about the benefits of invoicing as these regulations are brought in. When it comes to clearance, the tax authorities introduce normally a standard format that documents need to adhere to. And e-invoicing has obvious environmental benefits of eliminating paper, but having that standardized format is also providing an opportunity for governments in the future to introduce more data points that will be required on invoices, like carbon footprint data points, in order to have even more environmentally green impacts. When everything is digital, there's not much chance of an invoice going missing anymore, and documents arrive almost instantly. The platforms usually guarantee the integrity of content, and they provide audit trails for what's happened with that document. So in theory, this will enable faster payments, allowing supply chains to work in a more agile way. The biggest driver of digitization projects has been to reduce the processing cost of invoices. Introduction of clearance controls provides a brilliant opportunity to get the data that you've been asking your supply chain for if you've been running a digitization project, like purchase order numbers, because everybody is now going to be using that same format, and it'll be very easy to say, we need you to send this data point in this field, which will allow you to automate your business processes. And depending on the type of control being introduced and the specifics of a regulation, it could also mean that 100% of your documents will be received digitally from day one, which will mean the removal of lengthy supplier onboarding projects and significantly reduce the time to value realization. I think these benefits are often forgotten when looking at the complexity of the how and what needs to change. Sure, there's definitely a cost of implementing new processes, and it mainly falls on the shoulders of businesses to bear those costs, with often a little perceived short-term financial upside. But an interesting question to ask is, well, where is that break-even point? When will I see the benefits to doing this? I think that really depends on the size of your business and how many suppliers you have in your supply chain. If you're able to adopt a fully digitized process, then that's the break-even point's always been based on the percentage of your documents that are digitized, and because that's where you start reducing your operating costs. And so the introduction of government mandates presents an excellent opportunity to accelerate that break-even point. Every country that's looking to introduce changes has different requirements, and it's difficult to keep an eye on exactly what those requirements are. We'll take a look at a couple of countries in a moment that have announced their new clearance controls, and they've published their requirements. So we've had a chance to study them and look at exactly what's required. But I think before we move on, Susie, I think we've got time for a poll.
We certainly do, Marcus. So up on your screen now, if you could let us know, please, what percentage of your invoices are received via email or paper today? Maybe you're highly electronic and it's between 0 and 25%. Maybe you're kind of partially electronic and it's between 26 and 50%. Maybe 51 to 75% of your invoices are received through email or paper today. Or maybe 76 to 99% are received through email or paper today. Or maybe you're completely 100% email or paper based today and you haven't yet started on any kind of electronic invoicing program. So if you're 100% electronic today, go ahead, tick that last box. And if not, tick the boxes above which are appropriate to your own situation. So what percentage of your invoices are received via email or paper today? Closing the poll in 3, 2, 1. Results coming up now. Bit of a bell curve going on there, which is suggesting that 14% of you are completely paper-based stroke email PDF-based. 30% of you are in low volumes of electronic, with about 76 to 99% of your invoices coming in really through paper or email PDF. 34% of you are seeing about 50% to 75% of your invoice volumes are still very much as manual, paper and email PDF. 14% of you are heading more towards an environment which is much more electronic, and 9% of you are quite heavily electronic, it would seem, with only between 0 to 25% of invoices coming in being paper or email PDF. Back to you, please, Marcus.
Thank you. And definitely interesting results there. I think one of the things is being cited in the new regulations that are being introduced is that structured PDFs have a limited shelf life in the future as well, and governments are looking for a true digital invoice as time moves on. And that's reinforced by the regulations being introduced in France. France is probably the biggest change happening in Europe at the moment. They are introducing clearance controls in July 2024. All suppliers will need to be ready to receive documents from the government portal on this date, because the biggest companies in France will need to be sending. And then there's a phased rollout depending on the country size for when other companies need to send their documents. France's requirements are very lengthy because the reforms are extremely thorough. There's 3 different invoice formats. Those are international standards supported within the regulations. Clearance is required for the invoice to be recognised under VAT law. Invoices need to be submitted and received from the tax authority portal, which is called the PPF, or Public Portal Facturation. My French is not great, so excuse me for anybody that's French speaking on the call. Reporting must be provided by both invoice issuers and invoice receivers, which is a key point to remember as we move on to look at Poland in a moment. And also that regulations are covering domestic business-to-business invoices, international business-to-business invoices, and business-to-consumer transactions as well. So the clearance controls being introduced in France should capture everything that's on a VAT return. In contrast, the requirements published by Poland are very different. So plans to introduce clearance in Poland have been delayed multiple times. The latest and planned implementation date is now July 2024, but there's a question mark above that still. If the changes go ahead, then all invoices will be in a structured format that's been introduced by the Polish tax authority. Clearance, the documents need to be cleared to be recognised as under VAT law. The type of clearance in Poland is pre-clearance, meaning that suppliers must register the invoice before sending it to a customer. But there's no changes required on what is sent to a customer or what a receiving customer needs to do when they receive an invoice. And regulations are only covering domestic business-to-business invoices. So the Polish changes are going to be easier to adopt for many businesses. But VAT in digital age, VIDA, as we mentioned earlier, for those that aren't too familiar, this is an EU initiative that's been going on for a while, and it's examined the challenges faced by all of the differing approaches to introducing these types of controls, with a view to harmonization, with the ultimate goal of reducing that VAT gap that we've mentioned. One of the things that they have recommended, that's currently going through the next consultation phase, and we'll go into that in more detail in a moment, is that pre-clearance controls, such as the control being introduced by Poland, is not the most efficient way of introducing clearance controls in order to get the best results for reducing the VAT gap. They have said that these types of changes will be allowed until 2024, but it's yet to be seen, and that's where the question mark comes in, whether Poland will pivot its approach to align with the EU recommendations, or whether they will go ahead and look to implement in 2024. And the changes being introduced by VIDA add another dimension of complexity when we're keeping an eye on the trends here. So yeah, the VIDA has the ultimate goal is to reduce the VAT gap, and the VIDA report came in 3 pillars, and the recommendations are currently going through the final steps of public consultation. There are about 18 issues that the report looks to address, and we'll look at just a few of them today. So the pillars are single VAT registrations, so simplifying the requirements for VAT registration for companies that are transferring goods within Europe. The platform economy, and how to address accommodation and transport platforms in order to make them accountable for VAT collection, and recommendations on digital reporting and e-invoicing requirements. So I think the most relevant recommendations within the report, when we look at e-invoicing and the regulatory trends, are the single VAT registration that should be in place by 2025. We expect this to make it through into law. Means that one company which would have previously had one VAT number for France, Italy, and any other country that they were operating in, will now just have one single VAT registration based on the first country of registration. And that's going to require changes to IT systems and an update on supplier and customer data. Nevertheless, this is viewed very positively, as it will reduce a lot of initial compliance costs and make it easier to reducing the barriers to trade. There's also a lot of support for bringing in a standardized format for documents. It's been recommended to use EN 16931, which is a format designed for business to government transactions. It will need to be adapted slightly, but it'll be a very welcome change for businesses if they didn't have to redesign their data points and their data processes each time a regulation comes into play. I think we'll also see digital reporting requirements for intra-community transactions come into law. That's where you'd have to provide reporting at the EU level for any transactions between countries within the EU. The initial recommendation has been to mandate that to within 2 working days, which there's been some pushback on. So we might see that come into law with a slightly longer time frame. And the proposal to not allow pre-clearance, so where an invoice is registered with the authorities before being sent to a customer, has got a lot of support behind it as well. Not from some of the countries that have already announced or have been considering introducing those plans though. We expect this to make it through, but any countries that have already announced plans to be allowed to continue. So there is, as I said, there's 18 other changes, and we haven't got time to go through all of them in today's session. But the next date for your diaries is the 24th of October 2023, not least because it's my birthday, but it's also when the recommendations of VEDA are going to be voted on. So that's a date for the diary to keep an eye on what happens following that. So 18 countries have announced intentions to introduce some form of controls. And it's likely that more countries will announce changes. This timeline shows the intended dates that have been announced to the market. The types of changes vary by each country, but most countries in this view are looking to introduce continuous transaction controls, where the government will have access to the invoices in real time. The Dominican Republic had been expected to try again to roll out a clearance process this year, but that may well slip, as there's been no formal announcement. It's just voluntary at the moment. Guatemala are continuing to roll out the final steps of their clearance process. Bahrain are still in the process of public consultation for pre-clearance controls, similar to Poland. And Denmark are intending on introducing periodic reporting requirements in the first half of 2024. But the 1st of July 2024 seems to be a favoured date, and it's a date that if all of these changes go ahead, there's going to be a lot of strain on finance and IT systems. We don't expect them all to go ahead on this timeline. There's often delays. But what happens if companies don't adopt the reforms? Yes, penalties. So today, the penalties for complying with reforms vary significantly depending on the country. In France, is a 60,000 a year penalty for a large enterprise really enough of a deterrent? Or because the cost of implementing the processes involved that are being introduced by the French government is going to be a lot more than that. And then, by contrast, Poland are looking to introduce a penalty of 100% of the invoice value, which is going to be very difficult, I would imagine, to enforce. They are saying that there will be a 6-month grace period between when the controls come into place and before penalties will be issued, though. Regardless of what the penalties are, these aren't optional reforms. And in the case of France, if you're not going to adapt, how are you going to receive your invoices? Because that will be how you receive them. So non-compliance isn't really an option. And it's hoped by tax authorities that the need for those penalties is not necessary. So as we've seen, there's a lot of changes happening, and there seems to be new news announced every single week. But what do you actually need to pay attention to right now? Well, it's important to understand that it's likely changes. It's important to understand what's coming up and what changes have been announced, so that you can ensure that you have resources in place to manage them in the future. But firstly, understanding your systems, what systems the proposed changes are going to impact, is important for you to find the best solution and plan ahead. Invoice flows and the content of invoices are most likely to be affected when the tax authorities introduce continuous transaction controls. An example might be a requirement to introduce a QR code into your invoices, which Switzerland, Portugal, and multiple other countries have introduced to date, and are planning to in the near future. Or a requirement to include a clearance reference number, which is associated with pre-clearance controls, into the invoice before sending it to a customer, may also mean that you'll need to adapt the way that you're sending and creating documents. But if a reform relates to digital reporting requirements and making sure you've got you're giving the data to the tax authorities, it might mean that you don't need to touch your invoice content at all, because you can deliver that reporting directly from your ERP. So there wouldn't be any impact on the way you transact with your supply chain. But it may be a requirement to have a look at, well, if this reform is requiring me to provide reporting on both B2B transactions, international or domestic, and business to consumer transactions, is all my data in the same place? What do I need to do in order to fulfill the requirements? And how am I going to go about ensuring that I'm ready to provide that data in the structured format being requested? So we've been working on providing clearance services for the upcoming changes in France and Poland, and looking at those requirements in depth over the last few months. And an important question to consider when we look at those changes specifically, as well as other changes and controls already in place in the markets, is whether the change is actually impacting accounts receivable, accounts payable processes, or both processes. So in France, the controls specify the format to use and require businesses to both receive and send documents in the end via the French portal. But in Poland, on the other hand, they have pre-clearance controls, and the only firm requirement, the only legal requirement, is for businesses to send the invoice via the Polish portal for a pre-clearance check. There are no legal requirements to introduce new fields onto the invoice or receive invoices via the clearance portal. Although businesses do have the option to connect to the Polish portal and receive all documents that have been submitted, but they have to agree to do so in order for the supplier to use that option. As we've seen today, there's a lot of plans being announced, which are often subject to changes and delays. In order to avoid panic and stay focused on what matters, I think there's one initial question that you should always be asking, and it will save you a lot of time in the long run. And that is, have the technical specifications been published yet? Even if it have, these specifications may well go through several iterations prior to launch. But no work on implementing any changes can begin until those technical specifications have been published by the authorities. So my advice would be, if they haven't been published yet, don't panic, hold tight, hope that the tax authorities' timelines will be kind to businesses, and wait until they have been published before assigning IT resources to spend any good chunk of time on looking at what needs to be done. So before we look at how we've supported some of our customers and how the Tradeshift platform supports compliant delivery of documents, I think it would be good to have another poll, Susie.
Great, Marcus. So third poll coming up on your screen now, please, if you could participate in that. We're curious to know how many live suppliers you're currently trading with. So how many live suppliers are you currently trading with today? So is it less than 1,000, 1,000 to 2,000, 2,000 to 5,000, 5,000 to 10,000, or is it more than 10,000 live suppliers that you're trading with today? So if you could participate in that, and I'll be closing the poll shortly. Just a reminder, how many live suppliers are you currently trading with today? Closing the poll in 3, 2, 1. Let's have a look at the results coming up on the screen now. So just under a third of you are trading with fewer than 1,000 suppliers. And then we've got 21% of you are trading with more than 10,000 suppliers, and the rest of you are somewhere in the middle. So an interesting spread there. Thank you. And back to you, please, Marcus.
Thank you. So, the first. So Tradeshift facilitates compliance in multiple ways for our customers. We have the way Tradeshift works is it's a platform, and you invite your supply chain to create your own network on the Tradeshift platform, and it's highly adaptable. So you as the customer can configure your own business rules. We ensure that the accounts are created with the correct identifiers, and then you can add extra compliance rules if you want it to be stricter, and Tradeshift gives you the flexibility of doing that. Well, we also have predefined compliance packages applied on document exchange. This means that we actively monitor the regulations in the market in over 50 countries, and we apply the compliance requirements at document creation stages to ensure that the documents comply with the regulations in the country. This is particularly relevant for post-audit compliance requirements. And then we offer, as an accounts payable solution, we offer inbound clearance services. So that's where we will help you connect to the government clearance portal to download and extract all documents addressed to you. And in some countries, some of the LATAM countries, we offer validation services. So if you're sent a document with a clearance number on it, and the regulations state that you need to verify that document has gone through clearance, we provide you with the ability to connect with the authorities and validate that that document has in fact been cleared and it is a valid tax document. One of our customers, Scheffler, are live now in 13 countries, and they leverage clearance services in China so they're assured that they are meeting all of the local requirements. They've said that by onboarding any supplier to Tradeshift, all Scheffler regions benefit through that digitization effort, and that Tradeshift's helped them facilitate cost savings whilst providing an excellent user experience for their supply chain. And Tradeshift supports over 3,500 customers. The Tradeshift network has been growing consistently and has supported transactions with a value exceeding $1 trillion US. representing some of the world's most recognized brands, as you can see on the screen. Our focus remains unchanged, which is to help customers move away from legacy means of transacting with each other and provide a platform to allow them to connect and collaborate in the most efficient way possible. Every month we facilitate 3 million transactions for our customer base. I think with that, Susie, I'll hand back to you for some Q&A.
That's great. Thank you so much. And we've got a good amount of questions come through, but whilst you're pondering on your question, let me just put the final poll question up on the screen. What would you like to do next? Be sent more information about Tradeshift compliance, speak to Marcus and his team, request a demo with Tradeshift, or sign up to the Tradeshift newsletter. So please let us know which one you'd like to take forward there. I'll leave that poll question open for a little bit, and we'll go ahead and start asking our questions. So first question to you, how straightforward is it for suppliers to use the Tradeshift platform?
So suppliers on the Tradeshift platform, they're able to create an account in a very short period. It's very fast to create an account, and then they're able to start sending documents immediately. Normally our customer will send out an invitation to connect with them, and by following the link in the invitation, you'll then be guided through the intuitive registration process, and you'll have tools there to support you in creating your documents. An invoice can be created in as little as 5 or 6 clicks and sent to a customer.
Okay, thank you. And we were talking about responsibility being on the supplier stroke buyer side. So just kind of nailing it down then, are you seeing it mainly on the supplier side or a little bit on the buyer side? Who ultimately is responsible? Does that change country to country?
So I've spoken to multiple legal teams and tax teams on this. According to legislation in a lot of the countries, the legal requirement is on the supplier. However, the buyer also has an obligation to ensure that they're trading with ethical companies, and so the legal teams I've spoken to often want additional controls in place within their own processes to ensure that their suppliers have actually done what's required of them by law. Which I know there's a great grey space in there, but it's very much open to interpretation of the legalese.
Yeah. Okay. So one viewer who's saying most of this seems to relate to AP. I'm looking at AR only. How is this relevant to me at this stage? I suppose the answer is very.
Yeah, absolutely, because you'll be required to send your documents to these clearance portals. Depending on the size of your business, there's different options, especially with the upcoming changes. So the authorities are often allowing businesses to connect via a web portal and create documents one by one manually within that portal and submit them to the authorities. But if you're depending on the change that you're looking at, you may, and how many invoice volumes you've got, you'll still need to be looking at building APIs to be able to send the data points that comply with the regulation. Tradeshift also helps with that via our Babaway technology, and we're able to offer EDI connections for outbound invoicing.
Mm-hmm. Okay, I'm going to put a question to you now. It kind of links back to the Visa slide where you were talking about the EN16931 format. So I'll put this question to you, and I know with some of these questions it might be a follow-up situation, but I'll go ahead and ask this one anyway. As per VIDA, we could decide to issue an e-invoice without customer consent as of the 1st of January 2024. If we were to do this and adopt EN16931 format, would we then be compliant with the Polish, French, Spanish, etc. mandates?
It's too early to say, I think, is the answer. VIDA's made the recommendation, but they can't make law in all of the countries. Those recommendations are still going through public consultation. And if you were to send a document in that format today, then it wouldn't meet the needs of many businesses, because the format that's been cited in the VIDA package is a format used that has all the fields required for a government organisation, and is widely used by government organisations, but it hasn't been assessed for the needs of other businesses within the market. So we expect at the end of October for those votes to take place on the proposals, but it will be some time before that gets into law, into EU law.
Yeah, so pending.
Yeah.
Yeah, okay, great. Thank you, Marcus. So moving on, so if we are a supplier in the UK trading with Europe, we don't seem to have liability at this stage, as these are EU based. What's your view on that?
You don't have liability at the stage to connect to all of these portals, and that it's unlikely that will be introduced by most authorities as well, because how are they going to enforce it? But what you do need to ensure is that you're complying with the regulations for sending documents within the UK, and that's regardless of where you're sending to, because they will still tally up the VAT numbers of UK businesses, and there will be reporting on that level. The UK haven't announced any plans to introduce clearance controls, and we wouldn't expect them to announce anything within the government that's sitting. But you can never rule it out as after the election and moving forward.
Okay, thank you. Let's move on. So I know that this has come up as a talking point quite a lot. So for large global companies, would you advise this to be run as a global centralized coordinated program, or a separate project run by countries within countries? This particular viewer is currently running it as separate projects, but they're considering changing it to a globally run program, or at least, and I'll just add on to that, or at least a regionally run program.
I think combining all of these things all at once is complex, and it should be done thoughtfully and over time. But there are massive benefits to having everything in one place, having one provider that's keeping an eye on everything for you. Tradeshift uses, for example, we use other service providers to provide services in countries where we haven't built the solutions ourselves. So different service providers will be able to help you provide services in different areas, but it may be the case that no service provider will be able to service every country, depending on how many countries you're in, that you're looking to adhere to clearance controls in.
Okay, so it sounds like from what you're saying, Marcus, there are good benefits to trying to run it in a more centralized way, like a centre of excellence kind of way within an organisation.
You'd be able to implement and look at an overall business automation process strategy, because all of your data will be in one place. Whereas, but the downside might be cost, because having a global solution rather than the teams going out and locally sourcing providers, may cost more. Yeah.
Okay. So another viewer is asking about when is this likely to come to the UK? I think you've answered that. Probably not within the next couple of years or so, at least till the next general election. A further question is, do these regulations apply to freight transportation invoices?
Yes, they apply to everything, and there's further levels further controls being added to freight and transportation invoices, like e-way bills and transport reporting that is being required. That sits outside of the definition of clearance controls, but definitely something that needs to be considered as well.
Great. I think we're going to leave it there. So thank you very much indeed to Marcus. That was a really great kind of update as to where we're at, and thank you so much for zeroing in on those 2 countries, and it was incredibly useful. If you would like further information and you didn't respond to the poll, please do email chi.lee@tradeshift.com, and she can help you with your inquiry as well. And we've got some more webinars coming up in the next couple of weeks that will likely be of interest to you or somebody in your finance team. So please do go on to sharedserviceslink.com and register for them there. Thanks a lot for your time and attention today, and we look forward to welcoming you next time. Thanks and goodbye.